Great. Well, great to meet you, Abishek. Thanks for joining. Can you just tell me a little bit about yourself? Just, where you grew up, college, class, recruiting goals, just kind of that stuff.
Yeah, definitely sounds good. So I guess I'll just, start from the beginning. I was originally born in India, and then I came over to the States when I was around 10 years old, and then decided to go to a, in-state college. Being from Virginia, William and Mary was a really good option for me. So decided to apply there. Fortunately, did end up getting in. Heard about, the great opportunities at their undergraduate business school that they have. So I decided to go there. So far I'm a sophomore right now, and going into the recruiting season, I've definitely looked at a couple banks, specifically, just to name a few like MUFG, RBC, Morgan Stanley. Since we do have a decent amount of alumni there from William
Nice.
and Mary, and we have some MBA alumni there as well, and just some students going directly from undergrad as well. So those are just a couple names that throw out there, just for me to refine my recruiting approach. And then apart from that, currently I am a math major, and then how I'm involved in the business school is I'm a finance minor. So I feel like those two combinations really were appealing to me, which is what I'm deciding to pursue. And apart from that, I'm in the finance academy here at William and Mary, part of the Mason Investment Club, which is our investment fund here at William and Mary. We're
Cool.
have around $40,000 to $50,000 of assets under management, and for that fund, I am a lead full time analyst for Salesforce. So, kind of in the software tech space is kind of where I am, focusing my priorities on regarding that fund. And I'm also in Greek life here at William and Mary, part of Sigma Pi fraternity, and also part of club soccer as well. So that's just a little overview about myself and a little bit about my background.
Great. Great. Thanks for sharing. A lot of good stuff. Um, well, whenever someone introduces themselves, it's my job to find little points of commonality, right?
Yeah.
That's like your job. I like to state the obvious.
Hmm.
So interesting thing. So I did not go to William and Mary, but actually my grandmother
Oh,
graduated from William and Mary
oh wow.
in like 1945.
Oh wow.
Like,
Okay.
so she met my grandfather. There's a naval station not too far when
Hmm.
he was preparing to leave for World War One or 19, in like 1940, 41, something like
Okay.
that. So there you go. I don't know, whatever that's worth. That was 80 something years ago,
Oh wow.
but pretty cool school. Been around for a long time.
Yeah.
So
Did you ever
um,
consider it yourself?
I personally didn't, but not for nothing to do with the school.
Mm.
I was very Midwest focused, and I didn't really look on the East Coast at all. So
Okay. Sounds good.
um, so yeah, that was that was just me. Would have been cool though. Would have been
Yeah.
cool. I should have. So okay, so I've got your question list here.
Hmm.
And I don't think I've really introduced myself at all. So I'm Ben. Like so I'm a former banker.
Okay.
That's why we're talking.
Hmm.
I was at Robert Baird on their consumer team doing M&A, primarily sell side M&A in
Hmm.
Chicago,
Okay.
and was there for a couple of years. I was also on the a member of the recruiting team as a
Hmm.
like a banker who did recruiting stuff,
Yeah.
um, and then then I left the industry, did some consulting
Hmm.
in human capital. So I kind of had this weird background where I did banking, but then I got into actually like coaching and training,
Mm.
and now I'm a lead certified instructor at Adventus
Okay.
for the financial modeling program,
Hmm.
which I'm sure you've probably heard of. I know you're on
Yeah.
our email list,
Hmm.
um, and I'm kind of this weirdo who's done finance, done banking, but also is actually I'm an expert in coaching, leadership development, and recruitment strategy,
Okay.
and I've advised banks on their recruiting. So
Okay.
so kind of a weird niche of skills, but very relevant for what we're going to be talking about, right?
Definitely.
So that's why I'm here. So let's jump into some questions here.
Definitely.
Um, you asked a good one up front, and I like how you're class of 27, so you're a
Hmm.
sophomore
Yep.
today, just started your sophomore year.
That's right.
And you asked what are some characteristics of successful analysts on Wall Street. I think if you ask that question to 10 people, you'll definitely get 10 different answers, but
Okay.
it's not about getting different answers. It's about where's the overlap between
Mm.
those answers, or what do you hear most consistently?
Yeah.
The things you're going to hear most consistently, the obvious ones, right?
Mm.
Attention to detail. You hear
Yeah.
that a million times. A strong work ethic,
Hmm.
willingness to learn.
Hmm.
Those are the things that you're going to hear. And I think a lot of those they're intuitive, relatively obvious. And so where the real value comes from you asking that question and us having a discussion is
Mm-hmm.
more about how do I demonstrate those characteristics?
Mm.
And the first thing you need to know is talk is cheap and
Yeah.
actions matter.
Yeah.
So don't tell someone that you're quick to learn.
Mm.
Show someone you're quick
Yeah.
to learn without
Okay.
saying it.
Mm-hmm.
It's much more powerful if they come to the conclusion instead of you. That's an influencing tactic.
Yeah.
I mean, this is a sales process,
Mm-hmm.
right? Sales process. You said you follow Salesforce, right? That's customer relationship management. That's all
Yeah.
about the sales process, top of the
Mm-hmm.
funnel, bottom of the funnel,
Yeah.
right? So you're doing the same thing with your networking process and the
Mm-hmm.
banks that you're engaging with,
Yeah.
and it's all an influencing process. I'm kind of zooming way out, zooming back in.
Yeah.
The way to show these things is from a story.
Mm-hmm.
So don't tell someone that you learn
Mm-hmm.
really quickly. Tell them a short anecdote
Mm-hmm.
about when did you have to learn a new skill that was technical and difficult
Yeah.
really quickly.
Mm-hmm.
Oh, I joined this club. I'm making something up, right? But I joined the
Yeah.
investment club. I had never heard of software package ABC,
Mm-hmm.
but I had to give a presentation to my peers in 2 weeks.
Mm.
Oh my gosh, what do I do? I had to do research. I watched YouTube. I
Mm-hmm.
did a training session. I played with it. I tested. I broke it. I fixed it. You know,
Yeah.
and then I came through, and my presentation wasn't actually that great.
Mm.
I had this mistake and that mistake and this mistake and that mistake, but through that process, I
Yeah.
learned way more than I could have if I had done it a different way.
Mm.
Um, so right there, you didn't
Yeah.
tell someone that you're good at learning, but that's a pretty cool story. In 2 weeks, you got up to speed, and this is my made-up story, right?
Yeah.
But like that's an example of a type of story that you want to tell. You don't have
Mm-hmm.
to say that you're fast at learning technical things.
Mm-hmm.
You tell them, especially when they ask.
Mm-hmm.
And the way to show that is really, bullets on the resume.
Mm-hmm.
Bullets on the resume they're not a laundry list,
Mm.
meaning they're not an exhaustive list of
Mm-hmm.
all these things that you've done.
Yeah.
It's a strategic and intentional list of things you want them to ask about.
Mm. Yeah.
That so
Mm.
if you've designed a resume very intelligently,
Mm.
you'll actually have embedded in there stories you want them to ask about because
Mm.
the line doesn't give you the full story.
Yeah.
It's like a cliffhanger.
Yeah.
It's like, oh, you did this and that was the outcome?
Mm-hmm.
What? How did that happen? What was the situation? Tell me more. Like you want them to be curious,
Mm-hmm.
and now you've asked about it. And assuming now they might ask about it in an interview
Mm-hmm.
or in an informational interview. It doesn't have to be a formal interview,
Yeah.
informational interview,
Mm-hmm.
right? A networking call.
Yeah.
Because hopefully they're taking a look at your resume and
Mm-hmm.
checking out a couple bullets. So characteristics. So there's really, I would say, two types of characteristics too to pull on this thread of what are characteristics of successful analysts on Wall Street. There's pre-offer characteristics,
Mm-hmm.
post-offer characteristics, and then like actually on the job characteristics.
Okay.
And certainly there's things that are universal throughout.
Yeah.
But before you get the offer, it's all about presenting yourself well, being able to articulate stories of when you've demonstrated those characteristics.
Mm-hmm.
Characteristics, again, we call it nimble learning, learning quickly, attention to detail.
Mm.
Um, even attention to detail, like that's like finding mistakes. When did
Mm.
you find someone else's mistake?
Mm. Okay.
I did a review of someone else's work, and this
Yeah.
is what I found, and here's how I fixed it.
Mm-hmm.
Um, you know, Initiative, also like passion,
Mm.
like a
Yeah.
reason for why you're pursuing this.
Mm-hmm.
So those are some of the characteristics they're looking for pre. But when you get on the job, it's what they're really looking for is someone who's going to make their peers and their boss's life easier.
Mm.
So that's the goal. Your goal is to make your peers' life and your boss's life, and it's everything's matrix now. You
Yeah.
probably won't have a boss, but you're going
Yeah.
to be working on projects, and everyone's going to be senior to you.
Mm-hmm.
So they're all your bosses. Congratulations. You've got 7 bosses, and that's just the way it is. So that's good because you don't have to make all 7 of their lives easier. You just
Yeah.
need a couple.
Mm-hmm.
And so how do you do that? Take stuff off their plate. So what they're really looking for, after you start are things like, oh, you were listening to what was happening in the meeting, you were quiet and taking lots of notes,
Yeah.
but you were listening and you're taking notes and you're
Mm-hmm.
thinking, you're like, oh, they mentioned that someone needs to put together this spreadsheet with all these prices and tickers and ratios from Cap IQ. Wait, I did something like that in my investment management thing. I bet I can figure that out. And you're thinking to this to yourself. And then after the meeting's over and the managing director rode off into the sunset and he's
Yeah.
home having dinner with his family,
Yeah.
you're there with the associate or
Mm-hmm.
the senior analyst, and you're like, hey, hey Bob, hey
Yeah.
Jane, I can help with this.
Uh huh.
I can help with this. I swear I did it before.
Mm-hmm.
I don't know everything. Can you show me this one question? I have one
Mm-hmm.
question. Once you show me that, though, I can get a draft together for you by tomorrow. And they're like, oh my God, really? That's awesome.
Mm-hmm.
Thanks, Abishek. Please do it. Yeah,
Yeah.
take a stab at it. Go.
Yeah.
And you didn't have to say anything to the meeting. You just took notes. You're listening to what was going on, but you found a way to help and you raised your hand
Mm-hmm.
and you said, I can help and here's how.
Mm-hmm.
Because the fact of the matter is, they don't know a damn thing about you
Yeah.
and they don't know what you can and cannot do.
Exactly.
And you're putting a burden on them if you don't raise your hand, because now they have to not only figure out what you can and can't do, then they have to figure out how that maps to all the things they have to do,
Mm-hmm.
and then they have to coach, teach, mentor, and train you on how to do it.
Mm-hmm.
When you raise your hand, you short circuit most of that process,
Okay.
and you also make it more likely for them to actually help you,
Mm-hmm.
in a lot of different ways in the future. And you're setting yourself up to learn more faster. So when you're on the job, that is the characteristic of a successful analyst on Wall Street.
Mm-hmm.
And by successful, I mean, first you got to get the full-time offer.
Yeah.
You can't be a
Okay.
successful analyst on Wall Street if you don't get a full-time offer.
Yeah.
And the only way you're going to get a full-time offer as an intern is if you demonstrate that we call that action orientation. That's the technical psychology term for it.
Mm-hmm.
That means that you're oriented towards action, not towards waiting,
Yeah.
not towards being passive,
Mm-hmm.
but towards taking action and finding a way to help. The next level would be, hey, I already put together the list of tickers, and the MD mentioned these 10, which I all wrote down and put
Mm-hmm.
there. But I also did a quick comparables analysis, and I added 5 more tickers. What do you think about
Mm-hmm.
that? Bang.
Wow.
And they're like, whoa, okay, cool. I like 2 of those. Get rid of those. But 3 of those are really good. Thanks for doing that. And now that's action orientation, right? You did a bias towards action. You showed, even if all 5 of your tickers sucked,
Mm.
that's not a fail.
Yeah.
It's not. Did you hit a home? Did you hit a home run? Was it perfect? No.
No.
But there's no perfect doesn't exist.
Mm.
So, but you showed them that you look things up, you use the rational process. But I bet if you really listened in that meeting
Mm-hmm.
and you're reading between some of the lines and you ask a couple good follow-up questions,
Mm-hmm.
hey, I'll put together that ticker list. I'll even do a comparables analysis to see if I can find some more.
Mm-hmm.
Should I focus more on this sub-industry or that sub-industry,
Mm-hmm. Yeah.
right? More like this or more like that?
Mm-hmm.
This ticker or that ticker?
Yeah.
And you know, all of a sudden they get to answer one quick question. By they, I don't mean the MD.
Yeah.
It's probably going to be the analyst, senior analyst, the associate, maybe a vice president, but
Mm-hmm.
probably the associate or senior analyst. And they're going to give you some quick guidance and go run with it. So
Okay.
after the offer, those are the most important things to do.
Sounds good. Yeah.
There you go. Okay. Got to give a quick pitch for Adventus here. So
Yeah.
in terms of the characteristics for analysts on Wall Street,
Mm-hmm.
as part of the Adventus program, you get access to our recruiting course at no additional cost. So the real value is the
Mm-hmm.
modeling course, which
Yeah.
I would highly recommend for you based on your background, since you're not
Mm-hmm.
a pure business major,
Mm-hmm.
but you're a math major. Like,
Yeah.
if you can really blow them away in Excel, and
Mm-hmm.
I mean blow them away, like,
Yeah.
you are going to absolutely crush it.
Okay.
One of the extra benefits a lot of people don't know about with Adventus is, yes, you get access to the modeling program and the certification program,
Yeah.
but we also have a recruiting program, and it's videos
Okay.
that I helped create with the
Mm.
founder, Dave, and we built out this program, and we spend a whole video on these successful characteristics,
Mm.
how to map them to your resume, what do they look and feel like in real life, and there's
Mm-hmm.
like 8 of them, and
Mm-hmm.
I don't have them in front of me right now, but we covered about 4 out of the 8.
Yeah.
So there's several more, and that's one of the hidden values of Adventus is it's
Mm-hmm.
not just financial modeling, it's
Yeah.
also about these how to be successful, how to frame it in your resume, how to build out your stories,
Mm-hmm.
and it's all centers around these characteristics you're trying to demonstrate.
Okay.
And again, it's all based on actions, not words.
Okay.
So that's the plug right there for Adventus.
Okay.
So okay, so you've got what are the advantages, disadvantages of being in a sole industry coverage group versus a product group? So the hidden assumption of your question, so again, you've asked what are the advantages, disadvantages of being in an industry coverage group versus a product group.
Mm-hmm.
So the hidden assumption in your question is that you're only looking at bulge bracket. All right. So the answer
Yeah.
to this question is different for middle market.
Mm-hmm. Yeah.
Period. So in the bulge bracket world, and I'll just preface this and say I was at Baird. I have a lot more middle market experience
Yeah.
than I do bulge bracket
Yeah.
experience. I know enough to be dangerous, so I'll be dangerous with you. From my understanding, and again, you need to do your own research and talk to these
Definitely.
folks. And this is a good question to ask a lot of people because, again,
Mm-hmm.
you're going to get nuanced answers.
Okay.
But here's my best understanding. If you're in a products group like an M&A group,
Mm-hmm.
you're going to focus on deal execution. You're not going to be doing so you're going to be focusing on transaction execution,
Yeah.
managing the process, which is going to be a lot of traditional tasks in investment banking.
Mm-hmm.
You know, could be going out to buyers, building models. Depending, are you buy side or sell side? You're going to have a
Mm-hmm.
different set of tasks.
Yeah.
Buy side, you're going to be doing more valuation,
Mm-hmm.
analysis, and diligence.
Mm-hmm.
On the sell side, you're going to be doing more supporting the diligence of others, managing the
Mm-hmm.
information of your company, building data rooms,
Yeah.
sending out memorandums,
Mm-hmm.
building trackers for
Mm-hmm.
buyers, and all sorts of things. So, whereas in the coverage group, that's more the sales arm
Mm-hmm.
in bulge bracket. So you're going to be doing more pitching. You're going to be doing more like idea books.
Mm-hmm.
Uh, you're going to be doing more of supporting research and strategic alternatives so that your managing director can go have a meeting with a CFO.
Mm-hmm.
That meeting probably won't lead to anything.
Yeah.
But when they do enough of them, they build a relationship. They play a couple rounds of golf. They go have
Mm-hmm.
dinner. They go to
Yeah.
the theater. They give them a bunch of advice.
Uh-huh.
The CFO will be like, hey, can you have your team, research, 100 million to $300 million acquisition targets for us in France. I
Mm-hmm.
don't know, right? Who knows?
Yeah.
They have all the guys are, oh, absolutely, we got you, we'll take care of that.
Yeah.
Bang, then you're the little guru who actually puts together, does the research, that
Mm-hmm.
list, builds it out, puts it in slides, makes
Mm-hmm.
it pretty.
Yeah.
You work with your associate, your senior analyst, and then a vice president, director, MD will take that book and go have a meeting with that CFO. Okay, here's what we
Mm-hmm.
found for you,
Yeah.
right? And when they do that enough times, then when a big deal comes down the pipe, your bank is well positioned to win it
Mm-hmm.
because of this relationship built, all the work that you've done. It builds again when you do lots of things for others, you help
Mm-hmm.
them out, they're going to look to you first for advice, you're going to
Mm-hmm.
become a trusted advisor. So that's ultimately what the coverage group, they're more on the sales side, advisory, building relationship. So when the big deal comes down, they win it,
Mm-hmm.
and then they're going to bring in the execution team to
Mm-hmm.
actually execute the deal.
Yeah.
So that's the high level description. So advantages, disadvantages. So think about being on the coverage group. The
Mm-hmm.
disadvantage of being on a coverage group is that you're going to have less exposure to transaction execution.
Mm-hmm.
So you've got to think about what is your goal. Do you just want to do idea books and pitches and have less transaction exposure?
Mm-hmm.
That's some would argue that's a disadvantage. Some would argue that's an advantage. That's your personal opinion. Ask people, see what they think, learn, figure out what you would enjoy more.
Mm-hmm.
I think it's a great place to be.
Yeah.
There's not. I mean, there's really no downside. The downside is what you don't like,
Mm-hmm.
really, in all practicality. That's the
Yeah.
downside. To being in a product group, the hours are going to be long no matter what. I've
Mm-hmm.
heard different things. I've heard that product group hours can be longer. It depends. You're
Mm-hmm.
probably going to be more feast and famine.
Mm-hmm.
You have 100. If you're on some $50 billion deal and things are just going bonkers, like
Mm-hmm.
you're not going to get a lot of sleep.
Yeah.
Um, Whereas if you're on the coverage group, yeah, you're going to have ebbs and flows and you're going to have a lot of hours. But like the meeting that you have with the CFO, it got scheduled 3 weeks from now.
Mm-hmm.
You were going to follow a process to build the book before then.
Yeah.
it could be a little more regimented.
Hmm.
I want to caution you and preface all this with saying you're going to see a lot of variance across banks,
Yeah.
across coverage groups,
Yeah.
across times of the year, across
Hmm.
times of the business cycle,
Hmm.
right? M&A ebbs and flows. So all these things are going to feed into that. And so you just have to understand that all those things can make what I'm saying the opposite could be true.
Okay.
So, but the high level, but what is definitely universally true is investment banking is a client services business.
Yeah.
And you've got to understand that as a college student.
Hmm.
It took me, I heard that, I didn't really know what it meant until
Yeah.
I actually was doing it.
Uh-huh.
Research what that is, client services. What are other examples of client services businesses? Lawyers,
Hmm.
uh, you know, consultants,
Yeah.
consulting engineers,
Yeah.
people who design bridges, right? They
Hmm.
don't build the bridges. They just sit in an office and type on a computer and they make bridges
Yeah.
on the computer, right? So what do they sell? If you sell PowerPoints and spreadsheets,
Hmm.
you're in professional services.
Yeah.
If you and Word documents,
Yeah.
and that's the lawyers, right?
Yeah.
That's professional services. So as part of that, you have typically a more senior person who's a
Hmm.
deep, deep expert in something.
Yeah.
Again, the law partner
Hmm.
or the 30-year tax accountant who knows everything about this subsection of the IRS code, or an investment banker
Yeah.
who's done 30 deals, 50 deals, 100 deals in this particular subsector and is the
Hmm.
go-to person. Their job is now not to be doing all the dirty work and the hard work. Their job is to build relationships
Hmm.
and win new deals. So that's an overarching umbrella that you need to understand client services or
Hmm.
professional services and how client services works
Hmm.
generally, because the banking model will fit into that at a high level.
Sounds good. And kind of a follow up question for that, if you don't mind. I'm mainly specifically looking into some of the capital markets, role. I've talked to a lot of people in debt capital markets, and that's
Yep.
kind of where I'm leaning towards right now, and even some people in leverage finance. So I was wondering, if you had kind of some insight there into, I guess advantage and disadvantages, specifically, I guess with, equity or debt capital markets, or, one of those product groups that kind of aligns with, big balance sheet
Okay.
banks and,
We didn't cover that. Yeah, like the ECM and DCM. So that's a great question. And again, I know I was not working in a product group or on
yeah.
an ECM or DCM desk.
Uh-huh.
So, however, what I can tell you is it gets a little trickier.
Hmm.
Speaking very broadly about capital markets, it
Yeah.
will tend to narrow you in a little more because
Hmm.
of how technical and specific those types of jobs are
Hmm.
and the
Yeah.
types of tasks that you're doing and the skills that you need to build. If you're doing broad types of, like, compare that to being a coverage banker,
Mm.
you're doing a broad swath of research, you're developing relationships, you're going to meetings, you're doing research on books, you're building a model, you're actually doing a very wide set of tasks.
Yeah.
When you go in the ECM, DCM, capital markets
Hmm.
direction, your tasks become more focused. If you're on an ECM desk, you're supporting IPOs, secondaries, these types of things. That's just by definition more narrow.
Hmm.
So if you find out that you love it and you've talked to people and you're passionate about it,
Yeah.
that's a good thing, right? Because you're building a career, you're building a skill set and something relevant to what you love and what you want to do.
Hmm.
If you get there and you're for there 2 years and you're like, oh my gosh, I hate this, then that kind of stinks. It's going to be a little harder to pivot. It's going to be like going over to private equity is might not be an option for you. It's going to be a harder lift because you haven't done 6 or 8 middle market M&A transactions, and you know, believe it or not, most of the private equity firms operate in the middle market.
Yeah.
It's because there's a lot more companies that you can buy and sell.
Yeah.
So, just think about, you want to think a couple steps ahead. But I can see you personally have some experience in, with the investment group and things like that. So,
Hmm.
I can see you being a little bit more interested in it. So those are some of the considerations that I would say up front on the capital market side. Now, if you have more of a quant background, maybe debt capital markets could be really cool.
Yeah.
Debt is a massive market
Hmm.
and it's very technical.
Yeah.
1 basis point matters in debt, whereas 1 basis point doesn't really matter in equity.
Yeah.
And so, and I'm teasing a little bit, but like,
Hmm. Yeah.
there's, you know, th- small changes can make big differences in debt, and so the quant piece is very, very important. Now, the other risk that I'm not an expert on, but is out there is like AI, automation,
Mm.
these types of things. I think you do the more technical and quant based your work is, you do run the risk of AI being involved, but I could also make the opposite argument that
Yeah.
just says, okay, well, you just need to learn how to leverage the AI tools. Okay,
Yeah.
now now you're back in business. So, I don't see AI. I personally am not someone who believes AI is going to replace all these humans. It's
Yeah.
we're going to say this has already been happening for the last 100 years since the
Yeah.
Industrial Revolution. Like,
Hmm.
believe it or not, we used to have like blacksmiths that used to make like horseshoes. Okay,
Yeah.
like now, how do you? But you know what? Do they still make horseshoes?
The blacksmiths.
Well, no. Does our society still make
Yeah.
horseshoes?
Yeah. 100%. Yeah.
They do, but there's
Yeah.
no blacksmiths. So
Yeah.
how do we do that? Okay, well, we have machinists,
Hmm.
and we have automation technicians,
Yeah.
and we have
Engineers.
metallurgists
Yeah.
and engineers,
Yeah.
and we have technicians
Hmm.
and machine mechanics.
Yeah.
So we computer programmers. So
Hmm.
we do still make the same things. We just the jobs change.
Exactly.
So you know, but if you're comfortable with that environment, if that sounds exciting to you to learn these different technical tools,
Hmm.
to be on the cutting edge of things on the quant side, if that sounds exciting and fun, then that could very well be the right path. So you can see, hopefully, you can see between the lines here of what I'm saying is it very much depends on you.
Hmm.
And part of you, smile, they're like, okay, well, yeah, I get that. That makes sense. But
Hmm.
wait, I don't know what I want. you know, which should be a normal response. That's why the networking is so important.
Hmm.
Talk to people in ECM, DCM, all these different areas. Make sure you know, what do they love about their job? What do they
Hmm.
hate about their job? Ask them those questions. I really
Hmm.
challenge you to ask those exact questions. What do you love
Definitely.
about your job? What do you
Yeah.
hate about your job? And ask them, what do they hate?
Mm.
It's a psychological technique which I got to help you quant guys out with,
Yeah.
right? Psychological technique. Ask about an extreme something
Mm.
because it's bold and it's
Hmm.
in your face, you know, as opposed to tell me about your average day. What a horrible question.
Yeah.
That doesn't even make any. What is an average? You can't average
Yeah.
days together, so
Exactly.
mathematically that doesn't make any sense. Now they're going to tell you about some generic day that's actually
Hmm.
impossible and doesn't
Yeah.
exist. So you've now wasted everybody's time because you
Hmm.
asked a generic question.
Yeah.
Don't ask that. Ask, what do you hate about your job?
Mm.
Whoa, you know what's going to happen
Wow.
mentally is they are going to go to some moment where they are really pissed off or frustrated.
Oh.
No, they're going to decide what to tell you, what they want
Yeah.
to tell you, what they don't want to tell you. They probably won't tell you the worst thing,
Hmm.
but they'll tell you the third worst thing or the
Yeah.
fourth worst thing, and it will be very informative. And it's the same thing as reading negative reviews on products. I
Mm.
love reading negative reviews. Why? Because they're very informative.
Yeah.
They're very informative. When
Yeah.
you have a product and it's the same thing. So when they tell you something that they don't like, that
Hmm.
pisses them off, that they dislike, that they hate, and you're like, well, that's not so bad.
Mm.
I don't mind that.
Yeah.
Then you're like, all right, well, that's a great indicator.
Mm.
You know, someone reviews the negative product. Oh, this product is so light blue. I hate the shade of light blue. And you're like, no, I want a light blue one. Then, right now
Yeah.
you've learned, you could feel pretty good about buying that thing.
Exactly.
Um, so there's that same element there. So that's like a direct order. Ask them, what do they hate about their job? That's the best way for you to figure out if you're going to love something or not. Yeah, that's the real value of networking.
Mm.
Everyone tells you to do it. It's not to check a box.
Yeah.
It's to learn,
Yeah.
and not just learn technical things. Not just learn how to talk and how to shoot the breeze, or how to conversate,
Hmm.
but more importantly, help you figure out where do you want to go in your career path, and most importantly, get where you want to go faster.
Yeah.
Because the biggest mistake a lot of bankers make, they don't do networking with an eye towards figuring out their career path. They do networking with an eye towards getting a job in banking.
Mm.
They work there for 2 years and hate it, but
Yeah.
they're making a lot of money. So they stay another year and they stay another year because
Mm.
they got a really big bonus. And then they get married. And then they've got 2 kids.
Yeah.
And then their wife doesn't work. And they
Mm.
have 2 Mercedes and they live in a $1.5 million house. And now you're stuck.
Yeah.
You're not leaving
Yeah.
because you're just not leaving because you can't take a 70% pay cut to go
Yeah.
work a corp
You're gonna
dev
lose.
job.
You're gonna lose everything you have, right? Yeah.
It's a very unfortunate situation that a lot of people
Mhm.
get stuck in.
Yeah.
So something to watch out for. But the
Definitely.
key thing is like that's what the real value of the networking is to help you. You can learn in 15 or 30 minutes.
Hmm.
You can learn from someone who's been on the job for years.
Mm.
And so you can skip those 2 years of working at a job that you might not like, and you can learn from the person who is already there.
Okay.
Even if they love it, they might love it.
Yeah.
But if they tell you the things they love and you're like, oh God, that sounds terrible. And
Yeah.
they tell you about the things they hate, and you're like, I don't mind that at all. You're like, okay, this is not a fit. Right. And now you
Yeah.
can move towards the next thing. It doesn't mean you won't be banking, but it might mean that middle market is a better fit for you than a product group in bulge bracket.
Yeah.
It might mean that an oil and gas boutique in Houston is a better fit for you than a full service mid market bank in Cleveland.
Mm.
All these different things, so it doesn't mean banking, no banking. It's like there's such a big ecosystem
Yeah.
within banking. Um, and I'm a big advocate for middle market. I'll
Yeah.
just tell you that's my bias. Partly because I was there, but I didn't get there randomly
Yeah.
and then decided to like it after I was there for 2 years.
Hmm.
I did. I before I even I went to business school at Northwestern. Before I even showed up for my first day of classes, I had talked to 50 bankers.
Mm.
Before I even showed up for my first day, I knew that I was likely. I knew I was going to be in Chicago, and I knew that middle market was the leading candidate.
Hmm.
I didn't rule out the other banks, and I followed through on the recruiting process, and I learned more as I went through it.
Mm.
But what I liked about it is that I wanted to do both. The beauty of middle market, if you go to full service middle market, you're
Hmm.
on coverage and deal execution.
Yeah.
It's great because you get to pitch a deal, win a deal, do the deal.
Hmm.
Like, I can't, I don't know. I'd be pissed if like I
Yeah.
worked my ass off to pitch for this deal and
Yeah.
we did 5 pitches and we didn't win 3 of them and
Yeah.
we finally won one and
Hmm.
then they're like, okay, we're gonna give it to someone else to execute. You keep pitching. I'm like, what?
Yeah.
What? No, that sucks. So right there, that's what I liked about it.
Yeah.
If that's not appealing to you, then middle market might not be a good fit.
Okay.
But if that is appealing to you, then check it out.
And I guess you kind of alluded to, I guess, the private equity exit after 2 years of being an analyst. Pretty generic trend a lot of people take. So would you say in certain cases, a full service middle market bank would be a better, I guess, starting off opportunity than I guess some certain bulge bracket coverage and product groups if your intent is to leave for private equity in about 2 to 3 years?
My opinion, yes.
Mm.
Statistically, yes. Now, I'm not saying that's universal,
Yeah.
but there's only so many blockbuster mega fund PE funds.
Yeah.
There's actually not very many of them.
Yeah.
And guess what? Everybody else wants to work there too. And
Yeah.
the folks who went to Harvard and Yale
Mm-hmm.
and Stanford are probably going to beat most everybody.
Mm-hmm.
So, from a practical perspective, if you want to, if you want to use the Moneyball approach, right, instead of the old-fashioned approach,
Uh-huh.
the Moneyball approach would say, go work middle market
Uh-huh.
in the Midwest because there's like literally 500 private equity funds who are in the middle market in the Midwest.
Yeah.
So, like, and not rinky-dink funds,
Yeah.
billion-dollar funds,
Uh-huh.
like that you've never heard of,
Mm-hmm.
that have a team of 20 analysts,
Yeah.
people who you've never heard of them because nobody leaves
Mm-hmm.
because they don't recruit.
Yeah.
They don't need to recruit.
Yeah.
So they have no presence because they don't need a presence
Uh-huh.
because they have their institutional investors who will
Mm-hmm.
never leave the fund because they make them so much money.
Yeah.
And every analyst or associate that gets in the door works their way to partner because they never leave. So
Mm-hmm.
you don't know about those funds
Yeah.
because they don't need a brand.
Uh-huh.
So
And I guess throughout my recruiting process, I've also spoken with some small lower middle market investment banking, bankers and MDs, and they kind of emphasize, I guess, the high amounts of deal volume that they work with. So
yeah,
is that kind of the same, going to a full service middle market bank, that works with higher enterprise value firms?
that's another trade-off with respect to bulge bracket versus middle market.
Mm.
Generally speaking, in the middle market, it's easier.
Yeah.
It's what we can say with 100% certainty is that there
Mm-hmm.
are more companies in the middle market than there are in the bulge bracket.
Mm.
We're
Yeah.
just stating facts, and it's not like 7% more, right?
Yeah.
It's like
A lot.
It's like 10x,
Yeah.
right? Or maybe even 100x. So it's
Yeah.
like it's orders of magnitude, so not
Mm.
like 12%.
Yeah.
So if there's more targets,
Mm.
there's more transactions. Like
Yeah.
that's just not up for debate. So
Yeah.
yeah, there's a hell of a lot more transactions in the middle market.
Mm.
Therefore, if you're a banker working in the middle market, you're going to see more transactions. My personal is for my experience as one anecdote.
Mm.
I was on the team with Baird for
Oh
two
wow.
full years, and I was on 4 deals start to finish.
Oh wow.
Like that's almost unheard of. Like you're
Yeah.
never going to see anything close to that in the Bulge Bear. And that's start to finish.
Uh
That's
huh.
not all the projects I was on.
Yeah. Yeah.
I was on 3 times as many projects doing something that started and didn't finish, or something that I came in halfway through, or an IPO that
Yeah.
blew up in smoke. But like all those types of things I did too. But I
Mm.
mean start to finish, from like part of the pitch,
Mm.
working all the way through to
Mm.
the closing dinner, and getting the little deal toy, like the whole
Wow.
thing,
Yeah.
in just a couple years.
Huh.
So think about, you know, whenever you're thinking about your next step, or just thinking about whatever you, almost solving any problem, put
Mm.
yourself in the position of the customer.
Mm.
And in this case, if your goal is to work for a private equity firm or a middle market private equity firm, especially, put yourself in the shoes of a middle market private equity principal.
Mm.
Who are they going to hire? Someone who worked at Goldman Sachs on a coverage team that did a bunch of idea books for CFOs for Google?
Mm.
Or someone who worked at Baird who's done 10 deals in the exact space that you work in?
Mm.
Who are you going to hire?
The middle market banker.
I, like 10 times out of 10.
Yeah.
Because I'm going to have to train that Goldman Sachs person from scratch, because they don't have a freaking clue about how to execute a middle market deal. Because it
Exactly.
is not the same thing as doing idea books for the CFO, for the Google CFO.
Mm.
Um, again, I'm very biased pro middle market.
Yeah.
Look, at the end of the deal, there's definitely going to be people who disagree with me, and that's
Mm.
okay. But from a high level, the things we can all agree on is there's more transactions in the middle
Mm.
market. If your goal is to get middle deal experience, period, executing deals, you're going to have a lot more action in the middle market.
Mm.
And most importantly, again, there can be exceptions. We have a business cycle,
Mm.
boom and bust.
Yeah.
But the middle market is different. Yes, there's boom and bust, but it's
Mm.
much more attenuated. The boom is not as boomy, and the bust is not as busty, I guess.
Mm.
Why? Because a lot of middle markets are family owned.
Mm.
And when grandpa passes away, or two people get divorced,
Mm.
or there's some type of natural disaster, like things happen and businesses will sell.
Yeah.
Will sell. It does not matter. There are a lot of situations in the middle market where, regardless of what the bigger market is doing, it doesn't matter. The business is going to transact. Bulge bracket's not like that.
Mm.
It's not like that.
So would you say, I guess, some middle market transactions or activity is even like counter cyclical, or doesn't really, I guess, follow the economy, is always active at all times of year depending on how the economy's doing?
I would just say lower ceiling and higher floor
Mm.
is the way to look at it.
Okay. Sounds good.
Not ceiling in terms of deal volume, but if you kind of
Yeah.
add like deal value,
Yeah. Mm.
add it up all together. Again,
Yeah.
lower ceiling, higher floor,
Okay.
more consistency.
Yeah. And then what, like, were you assigned to a specific, I guess, industry coverage group, with your M&A,
I was in
advisor?
consumer.
Okay.
I was in consumer. I was kind of the restaurant subgroup, and
Okay.
then I was kind of, so I'm an army guy. I was in the army for 10 years.
Okay.
So they put me on anything that had anything related to weapons or the
Okay.
military or
Yeah.
stuff like that. So I was in a deal where we sold 511 Tactical to
Okay.
Callaway.
Oh wow.
Should check out if they still own. Or sorry, oh my gosh, 511. I'm kidding. Sorry, 511 Tactical to Compass Group,
Comps Group.
uh, CODI, publicly traded private equity firm.
Okay.
Apologies, I'm getting my clients mixed up. This is all publicly announced. I'm not sharing anything
Okay.
that's
Okay.
not
Yeah.
public to. I have to say, everyone thinks like, oh, is this super secret stuff? That like, no,
Yeah.
it's like we announced it. It was on the newspaper.
Yeah.
Um, so CODI, Compass Diversified bought 511 Tactical. I think they still own it. I think they
Okay.
still own it. At least they did the last time I looked.
Mm.
And then I was in a deal that sold OGIO. So they make the backpacks. They make
Oh,
golf bags, backpacks, and
I've heard. Yeah.
some other bags.
Hmm.
Um, OGO. Most people do not know what OGO stands for. It is an acronym. I'll give you $100 if you know what that stands for. Um, the We sold them to Callaway. That's who
Okay.
bought that was Callaway.
Callaway.
Callaway is at the time golf is kind of in a resurgence now, but at the
Yeah.
time it was going down. They were looking to diversify, and because they did golf bags, it was
Hmm.
they had a little bit enough overlap,
Mm.
um, and so that was a good opportunity. I was also in a deal for Crimson Trace.
Hmm.
I guess OGO was less military related, but
Okay.
Crimson Trace was attachments for firearms, so
Okay.
lasers and scopes and stuff.
Okay.
We sold that to them to Smith and Wesson, so also a publicly traded company. So
Hmm.
really, actually, um, all three of my big clients who we sold our companies to were all
Hmm.
public. They're all public
Okay.
companies. One was a PE that was public, but the
Hmm.
others were strategics.
Okay. And kind
So
of
yeah,
going back to that question, so like, do you see more, I guess, financial sponsor buyers in the middle market compared to like versus strategic?
oh yeah, oh
Yeah.
yeah. By number, definitely,
Yeah.
because there's just hundreds of them.
Yeah.
But it's there's lots of publicly traded companies too,
Hmm.
but they're not all created equal. In that, you know, U.S. Steel is not going to buy OGO,
Mm.
the backpack
Yeah.
company. Like that's just that would make if they did, I would be selling U.S. Steel. Like there's something wrong with this company. They don't know what
Yeah.
they're doing. So my point is, when you actually look at the subset
Mm.
of strategic buyers who are relevant for that asset that's coming up for sale,
Mm.
it's usually a pretty small group. It's usually
Yeah.
5 to 10 or 20
Mm.
max, even though there might be whatever a couple thousand publicly traded companies. There's really
Yeah.
not that many. Whereas private equity, if you have a generalist private equity fund, they'll look at the
They'll
deal.
buy that.
They're a financial buyer,
Yeah. Hmm.
right? And they're not, so that's the essence. Is like a strategic buyer. That's the difference between a strategic buyer and a financial buyer.
Yeah.
Financial buyer just has money that they need to
Hmm.
invest, so
Yeah.
they give returns for their investors, um, and so they will tend to be more flexible. There are exceptions to that.
Mm.
Don't go nuts with that advice, but there
Yeah.
are exceptions. But generalist funds will be open to lots of different deals from lots of
Mm.
different industries, and then the strategics will have a more of a narrow focus. I'm looking for automation companies,
Mm.
in this size range in the
Yeah.
United States. And so they are sort of immediately out of the running for a lot of deals.
Okay.
Cool. Okay. So I think let's probably do one more question and then wrap things up. Is there anything, I got a list of several more here, but is there anything else that's top of mind that you want to dig into?
Yeah, definitely. So, I mean, like I mentioned, networking and, speaking with a lot of analysts, associates, alumni, you name it. So I was just kind of wondering how I can best optimize the network I currently have right now. And, I guess going forward, because I do have a little spreadsheet kind of tracking. I've kind of around, 50 to 60 calls, under my belt, including alumni, which we have, like I mentioned, decent amount on Wall Street, and, random cold analysts on the street as well. So I was wondering,
Okay.
moving forward as I submit applications and, reach out for second phone calls, what is the strategy there? Because I feel like the first step is pretty easy, the first phone call, but it's always kind of confusing, kind of moving on, and keeping that relationship and, having that second phone call, second interaction. How do I really approach that and optimize it?
Depending on where you are in the interview process, this is a tricky question.
Mm.
So, on average, you shouldn't worry so much about a second call.
Mm.
That becomes less true the closer you get to like decision points in the interview process.
Mm-hmm.
But the way to get the second call is to do a really good first call. So the
Mm.
first thing I would say is make sure you're following great fundamentals with your first call.
Mm.
Things like doing your research up front,
Mm.
engaging in listening,
Mm-hmm.
which sounds obvious.
Yeah.
And listening is one of those things that if you ask people, are you an above average listener? 90% of the people would say yes.
Mm.
Most people are horrible at listening. I mean, horrendous
Wow.
at listening. And it's
Okay.
gotten worse
Yeah.
because now we live on these little things and we just stare and
Yeah.
we're multitasking, we're doing all these things like that makes listening harder. I mean, really fully engaged. What does that mean? Stop looking at your questions
Mm.
that you wrote down.
Yeah.
You shouldn't if you run a great conversation, you ask one question
Yeah.
that you thought of in advance.
Yeah.
One question that you thought of in advance. That's
Mm-hmm.
enough. If it's a good question.
Mm-hmm.
If you ask a crappy question that takes them 30 seconds to answer and then there's just crickets,
Yeah.
then yeah, then okay, then you better, I guess you have to have 10 questions. But that's because your question was weak. So, it's important to ask open-ended questions,
Mm-hmm.
show that you did research. The best way to get a great conversation going, people think you need to ask big, open-ended, generic questions. I've
Mm-hmm.
heard that so many times. It's the opposite.
Yeah.
Ask a very narrow, specific, like don't get out of control, but
Yeah.
err on the side of being too specific.
Mm.
Let them tell you, well, I don't know about that subsector of the subsector in that particular situation, but here's what I do know.
Mm.
I did see this and I did
Mm-hmm.
see that. That's how that question will go.
Yeah.
Um, and it shows research. Here's the other key. If I were you, I wouldn't focus as much on the second conversation with the same person.
Yeah.
I would focus on a lead of a new conversation with a new person
With
that
a new
comes from the first
person.
conversation.
Okay.
So think about what's your conversion rate. How many intros do you get from your first call?
Mm.
What about how many out of 10?
So I guess last week I had 3 calls, and at the end of the call, I always ask, is there someone else I can talk to in a specific product group or coverage group? And then out of those three, 2 people emailed me back earlier this morning, gave me 2 new people. So yeah, it's
That's
usually
great.
like I would say around half. I would like to say a little more than half, but around half the time.
50% is fantastic.
Yeah.
It's fantastic. And I like how you said at the end, you want to kind of do it towards the end, but you got to
Yeah.
ask, do you know anyone in that particular product group or
Mm-hmm.
related to this particular thing that we
Yeah.
talked about? That's a great,
Definitely.
it seems that's working for you. If you
Yeah.
do that well, you'll get that 50, 60%
Mm-hmm.
conversion rate.
Definitely.
Um, Big mistake I see all the time is people
Mm-hmm.
don't do that. So well
Yeah.
done. You figured that part out.
Thank you.
50 calls though, that's great. Like that's a lot of calls to have under your belt.
Mm-hmm.
And I know a lot of people don't realize how many calls you actually need to, unless
Yeah.
they're in a banking club and they've been told by the seniors,
Yeah.
you need to. I don't talk to me until you've talked to 50 people. Um, that that word does get out there,
Mm-hmm.
but it's a very common mistake I see. And remember, this doesn't change when you get older.
Yeah.
When you're a VP looking for something new,
Mm-hmm.
you're not going to be able to just dial 3 people and get a new job. Like,
Yeah.
dude, it's going to be the same thing. You're going to talk
Yeah.
to 50. You know,
Mm-hmm.
a lot of people think, oh, I just need five. Send out my 5 emails. Like, no, multiply that times 10, just like you did. And you said you sent 200 plus emails, so that's great.
Mm-hmm.
Um, in terms of second conversations, the best way to get a second conversation is you have a good first conversation. It's a series of steps.
Mm-hmm.
You have a first good conversation.
Yeah.
You send an immediate follow-up note, even if there's nothing specific that came out.
Yeah.
Follow-up note says, "Thank you for your time. I really learned a lot about our conversation that covered A, B, and C.
Yeah.
Talk about the actual things you actually talked about."
Mm.
So they knew, because you're communicating to them that, oh, Abishek was listening.
Yeah.
He took notes. I actually made a difference for some, because these are human beings. Like, they care about helping somebody.
Definitely.
I'll tell you, there's nothing they hate more than wasting their time.
Mm.
And talking to a future banker is not a waste of time, but it is a waste of time if that person doesn't listen.
Mm.
It is a waste of time if that person learned nothing and got nothing out of the conversation.
Mm.
So when you send that quick follow-up note, doesn't have to be long,
Yeah.
but it calls out specific things that you took away, that you
Yeah.
valued. That makes the banker feel, okay, wow, that was worth my time. I like this person. They're probably not going to respond. It doesn't matter if they respond. They're going to see it.
Yeah.
Um, so you do that right away. Then after a month, 2 months, send them another note, just an email. Don't ask for anything.
Yeah.
Just give. What do I have to give?
Mm.
Give them an update.
Yeah.
Here's what I'm working on. Here's an interview that I got.
Mm.
Here's what's going on with my job search. Since I talked to you, here's a couple things that happened to me. I look forward to staying in touch.
Mm-hmm.
That's all you got to say.
Okay.
Notice how that can be bloody generic.
Yeah.
You could send that same email to 35 people.
Mm-hmm.
Now, don't do
Yeah.
BCC, don't do
Yeah. Yeah.
individual emails, but you could send that off to 35 people. Every one of them is going to think it's a personal email from you,
Mm.
especially if you can add one little nugget that's
Mm.
unique at the top.
Yeah.
But the 3 sentences below that can be standard, and that's how you just stay top of mind. They're like,
Mm.
oh yeah, I remember Abishek. He was
Mm.
good. He sent me a good follow-up note. Oh yeah, he'd be great. And that's it. They're moving on.
Mm.
So first call,
Yeah.
quick immediate follow-up after the call, and then
Mm.
an update a month or two later.
Okay.
Then you need an impetus to set up a second call.
Mm-hmm.
What do I mean by impetus? You're not gonna set up a second call with everybody.
Mm. Okay.
And my ratio, I'm a big, Pareto principle guy, 80/20.
Okay.
Probably 20% of your conversations you're going to set up a second call with.
Okay.
Just use it as a rule of thumb. It's not 80%.
Yeah.
If it's 80%, that means you didn't talk to enough people to begin with. So, but who are those 20%? It's people that are relevant to how your search has progressed.
Yeah.
So you talk to those 50 people, you talk to 80 people, and you realize, you know what? I'm going for Goldman Sachs in New York or bust. Don't even care,
Mm.
right? Now go back to your Goldman Sachs folks,
Mm.
right?
Got it. Yeah.
Because you made that decision
Mm.
and say, hey, I just got scheduled for an interview for next week. I was hoping I could ask you a couple questions I had a couple questions about my preparation.
Mm.
I don't know. You're not asking for the cheat codes, but you're
Yeah.
just asking like, help me prepare. I'm
Mm.
doing research. I was wondering if I could ask you a couple questions about my preparation.
Mm.
Um, Something like that could be okay.
Okay.
Now you got to know your bank and you got to know your culture and you got to walk the right line. So
Mm.
that's more important.
Yeah.
But my point is in saying that um, you need some type of impetus to make the ask
Mm.
for a second call.
Yeah.
It's not going to be a standard. I'm going to ask everybody for a second call because that's
Mm.
just my process.
Yeah.
I recommend against that. You're
Okay.
going to get a lot of disengagement. People are like, why are they reaching out? To be like, oh, could we set up another call? You know,
Uh,
or it could be like, or if you really have a passion, you know, you really, really know, like you've decided the impetus doesn't have to be something external. It could be internal to you.
mm.
You realized after talking to 3 middle market banks that you definitely want to be middle market. So I've decided to focus on middle market banks. I was wondering if I could ask you a couple follow-up questions and take 20 minutes of your time.
Mm.
That's all that you need. But notice how you're focusing on now a subset
Yeah.
of your original networking group.
Mm.
That's your second conversations.
Sounds good. And then I guess I've connected with some I guess higher up people like some managing directors. So I was wondering if you kind of had some advice of how I should approach a second, I guess even a follow up email or like even a second call with them because one specifically at RBC I've already had 2 calls with them my freshman year and then one going into the summer. So I kind of don't really want to push for a third one, and I don't want to like I don't know waste this time with not having new questions to ask or anything like that. So I was wondering how I'd kind of approach that specific situation.
I mean, make sure you're sending that person updates.
Mm.
Send them 2 updates before you ask for a call.
Okay,
Keep,
sounds good.
because if you already talked to someone twice,
Yeah.
that's great. Like you guys clearly you got a little chemistry there.
Mm-hmm.
And if the things went well, if they were still,
Yeah.
all right, you got any questions, please reach out.
Yeah.
Like that's a great resource to have. The way you keep that person engaged with you is by not asking for anything. Keep
Yeah.
giving.
Yeah.
Give.
Yeah.
Give 2 times, ask once.
Okay. Sounds
All
good.
right.
Because they did come for an on-campus information session about 2 weeks ago, and I met him in person again. So I
Oh,
guess
great.
I'll definitely just bring that interaction up, and just keep him informed if that's good.
Yeah.
Okay.
Say hey, I talked to someone else. They mentioned this thing that we talked about.
Mm.
Just wanted to tell you that our conversation when you helped me with this advice,
Mm-hmm.
it's had a really positive impact on me.
Okay.
That's it.
Perfect.
End
Yeah.
email.
Yeah.
Like
Short and
that's
sweet. Yeah.
short and sweet. Again, but you see how you're giving.
Yeah.
You're giving to them. You're giving them an update.
Mm.
Um, Another thing you can do, a tactic. I mean, I wouldn't go nuts with it, but
Mm.
can you get? Is there an article that's
Mm.
relevant for them?
Okay.
I came across this article. It made me think of your conversation and how valuable that was to me.
Mm.
Put the link in.
Mm.
They're not going to click. It doesn't matter if they click on it or not.
Yeah.
You're just again, you're giving them something. You're giving them a resource. You're giving them information. You're giving them an update.
Mm-hmm.
Give. You don't have to. I think the people are like, oh well, how can I give something to an MD? How can I help an MD? Like, eh, we're talking about very small things that you're giving. You're giving them your time and your thought
Mm-hmm.
and your energy, and you're giving them an update about you. And so if you do that twice and then something comes up that's relevant to talking to that person, then you're cleared hot to reach out again.
Mm.
And you see how you're building a real relationship with this person.
Yeah.
It's not just transactional, one, wham, whatever, just doing this like superficial banking conversations. Those get old really.
Yeah.
I'll tell you, as a
Yeah.
banker, they get old really fast, and you
Yeah.
know who they are. They're so obvious.
Yeah.
When you just imagine yourself on the other side of the table.
Yeah.
When you know, the average banker doesn't actually get that many reach outs, not as many as you think, because
Oh,
there's a
really?
lot of bankers out there.
Okay.
Now, maybe if your university has only 3 bankers in New York City and they
Mm.
tell everyone, tell 100 people to email these 3 people, okay, yeah, they're
Yeah.
going to get a bunch of emails. But
Yeah.
like that's not the case with most people,
Mm-hmm.
and they get a fair number, but it's not overwhelming.
Mm-hmm.
But they get good at them because they've been on your side and now they're on the other side.
Yeah.
And I guarantee you, they can sniff out a generic call in like the first 30 seconds.
Yeah.
And I'll tell you, there's very little that's more frustrating than a disengaged person who is not that interested. You can tell they're not that interested in the job.
Yeah.
And they're just doing this because they were told to. So
Mm-hmm.
stay out of that by doing your research, being thoughtful, following up,
Mm-hmm.
and building a genuine relationship. The way to think about networking for the rest of your life, because one of the secret skills you're building is a skill of networking
Mm-hmm.
and the skill of finding a job, because this job you're looking for is tough.
Mm-hmm.
It's tough. There's
Yeah.
no conveyor belt you're just going to stand on and
Yeah.
you're going to end up with a job on the other end. Like it's a tough slog. It's climbing a mountain, but you're learning how to mountain climb.
Mm.
And every new job you're going to find after that is a different mountain. And so you're going to be able to use these skills. And networking, the way to actually think about it for the rest of your life is purpose-driven advice seeking.
Mm.
All right, I'll say it again.
Yeah.
Purpose-driven
Purpose.
advice seeking.
That's it.
Meaning, good networking is actually you have a purpose for reaching out
Mm-hmm.
and you're going to ask their advice. I mean, it's
Yeah.
the
Straightforward.
wisdom is the simplicity,
Yeah.
but it's authentic. You notice how you're starting with your goal?
Yeah.
A lot of people are like, "Oh, I don't want to reveal my intentions." Like, "Oh, I want." They know you're like, "Come on, it's
Yeah.
transparent." So if you pretend it's not there, you're trying to get a job in banking.
Yeah.
Again, be specific.
Mm-hmm.
Don't be like, "Oh, yeah, I heard investment banking was really cool and they make a lot of money." Obviously, that's not going to go well, and everyone knows that. So I'm being a little bit facetious.
Yeah.
But instead, say, "I'm really interested in full service middle market banks in Chicago.
Mm.
What's your best advice on how to break in?" You can ask anybody that.
Yeah.
They're not just bankers in Chicago.
Yeah.
You can ask a bulge bracket banker in Charlotte.
Yeah.
Like you can ask a boutique, an elite boutique in
Mm-hmm.
Boston. Like you can ask anybody that question. I'd be like, "Oh, you know what? Yeah, I got some friends over there, and
Mm-hmm.
I did interview with Baird back over here, and I did this, and they're going to have a bunch of really good advice." But what you've done subconsciously is you've now sort of forced them or
Yeah.
convinced them to solve your problem for you.
Mm-hmm. Yeah.
And so that's what great networking looks like. It's not superficial.
Mm-hmm.
Here's my background. Here's your background.
Yeah.
How's the weather? Tell me about a deal you worked on. I didn't ask you about anything you just said. I went on to my next question. Like those conversations, like that's the easiest way to get your name scratched off the list because
Yeah.
it's just so obvious.
Sounds good.
So cool. All right, Abishek. Hey, this was great. Glad we got a chance to connect.
Yeah.
Feel free to connect on LinkedIn. So Benjamin C. Dowell, if you haven't already.
Mm-hmm.
Good to meet you. I hope this was helpful for you.
Definitely.
And check out Eventus, man. Obviously, I do some. Again, they're my side gig. I do work for them. I am biased, but I'll tell you, it is the best financial modeling training
Mm-hmm.
to take first.
Mm-hmm.
It's not the only training out there.
Okay.
But what makes them different is that they are the most foundational,
Mm.
fundamental keystrokes, shortcuts,
Mm.
just building the financial statements.
Mm.
There's a ton of other training out there that'll teach you how to do this. Oh, I'll do the public company merger model and accretion dilution model. Okay,
Yeah.
great. Go get your PhD in finance and do a bunch of that stuff. Okay,
Yeah.
well, most real bankers never have to do that.
Mm.
But what they are doing is they got a model, financial model, 3 statements, and their CFO client just sent them the new monthly numbers for September.
Mm.
What do you got to do now?
You got to format it, put it in a good format, make it look good.
You got to add it to the model you already got.
Yeah.
And if you don't know how to do that without a mouse, then you're going to have a long night.
Yeah.
So that's the beauty of Adventus. You're going to
Definitely.
learn how to use Excel without a mouse
Yeah.
because you can't pass the test if you're clicking around on your mouse. It's not
Yeah.
possible.
I
Like
mean, I've considered
so,
getting a Windows laptop, selling my MacBook, just for that reason.
I
Excel's
recommend
not
it.
the best, right? Yeah.
I mean, like a lot. I'll go off about Macs. Like have a Mac, whatever. My daughter has a Mac.
Yeah.
I'm not a Mac person. I have an iPhone, I guess. But um, look, the business world lives and breathes PC.
Yeah.
It's just the way of the world, and the
Hmm.
sooner you get familiar with it, the better for you.
Yeah.
It's going to mean going home earlier, getting more sleep,
Yeah.
and being more successful and making more money. So if you don't want any of those things, then definitely don't get a PC.
Yeah.
But it's just it's a tool. Like
Hmm.
it's a tool. I don't know.
Hmm.
Like pick a tool. Like if
Yeah.
you're what's your profession? I don't know. If you're a surgeon that does robot surgery, well, you probably ought to learn about the robot that does surgery in your field. You
Yeah.
probably ought to be really good at it. So
Yeah.
the ThinkPad, that's what I have. I
Hmm.
recommend it. It's pretty much what everybody uses.
Definitely.
That's the robot that everyone uses in surgery in this industry. So silly
Sounds
example.
good. I'll definitely keep that in mind. Anyways, thanks a lot for your time, Mr.
Cool.
Dowell. It was I know the advice was great. I'll definitely put that into my recruiting and networking strategy, and I'll definitely check out Adventus Financial Modeling as well. I've done some other courses, but I'll definitely take a look at Adventus as well.
Cool, man.
Yep.
I will tell you, I did it after I was a banker,
Okay.
and holy crap!
Yeah.
If I had done it before, my productivity would have been, I think double is too much, but it would have been 30 to 40% higher.
Wow.
There were tasks that took me 6 hours that should have
Mhm.
taken me 2 hours.
Okay. And what
And
is it? Is it the hotkey functions? Like what kind of makes
no,
this?
we do. Whoa. We disable hotkeys. So let's just be.
Okay.
Look, it's about it's making again the formatting,
Hmm.
tracing,
Hmm.
troubleshooting,
Yeah.
circularities,
Circularity. Yeah.
all those things become second nature and intuitive
Hmm.
because they teach you ultimately a 10-step model building process.
Hmm.
And you use the same process whether or not you're building a model from scratch for the first time with raw data, or if someone hands you a jacked up model that's got
Yeah.
issues all over it,
Yeah.
which is going to happen
Yeah.
almost every single time. Like, show me one model that doesn't have a mistake in it. Like, please show me one.
Yeah.
They're just not really out there. So when you know this 10-step process, you know there's an issue and you don't know where it is.
Hmm.
You follow the 10-step process to make sure your model is built soundly from end to end.
Sounds good.
Um, and yeah, and you're doing it without a mouse.
Yeah.
So that's the key.
All right.
And what happens is you end up being more accurate and faster.
Hmm.
So kind of hear this, oh, attention to detail, attention to detail. Yeah, but how? Build great troubleshooting habits.
Hmm.
How are you double checking? How are you building checks into your model?
Hmm.
How do you use, control left bracket F5 enter? How are you tracing, double checking? How are you color coding? What's your
Yeah.
syntax like?
Yeah.
All those things, the formatting. It's just like it's a little bit like computer code
Mhm.
where you indent and use brackets and braces and text and all these things
Right.
to organize. And if you don't learn how to do that,
Hmm.
it doesn't mean you can't code,
Yeah.
but it means that you're going to be lost if you have to fix something.
Yeah.
So,
Sounds good.
and again, but you should learn that before learning all these esoteric advanced languages.
Yeah.
So,
Yeah.
and the other thing too is Adventus makes your training at TTS. Because I've taken all of them, Wall
Mm.
Street Prep, TTS. We
Mhm.
took all that stuff at Kellogg, and Adventus is, I would call it a prerequisite.
Mm.
It's a prerequisite. If you take that, you will get 3x the value out of your TTS course
TS.
because you're not going to be worried about keystrokes.
Yeah.
You're going to be worried about the modeling principles they're teaching
Hmm. Yeah.
on accretion dilution, or where to look inside this 10K for this piece of information and how
Hmm.
to get into the modeling. Like you'll be focused on what they're teaching you, not trying to learn the fundamentals of your keyboard
Excel.
and what the shortcuts are and what the modeling principles are and how to trace and troubleshoot and build in checks. You're not worried about that because you already know that, intuitively. So,
Okay.